Volatility is going to continue to dominate the markets due to fundamental factors such as the ongoing coronavirus situation, inflation, and instability around the globe. What's going on, everyone? My name is MetaMatt, and in today's video, we'll be talking about the stock market and some stocks that I am watching for this week. Future downside risks are 100% a possibility at this point. Using the proper risk management techniques could easily help to offset any losses. We have an insane economic calendar in the week ahead. Not only do we have the Fed meeting where we are expecting a 75 to 100 basis point increase, but we are also getting data on the GDP and a ton of manufacturing data from the Federal Reserve banks across the country. Expect heavy volatility this week going into the Fed meeting and after the GDP. We also have a lot of great earnings coming out this week. I'm going to be breaking down some of them later on in this video. But before we get into individual stocks, let's talk about the market as a whole. The S&P 500 played out to a literal T last week, with it running into the $4,000 resistance like we were expecting going into the Fed meeting. This week looks like it could be a potential major short setup for weeks to come, meaning bearish. However, we aren't expecting any big movement until after the Fed meeting and GDP. The Dow is also sitting inside of the sell side golden pocket, just like the S&P 500. In my opinion, as I've stated before, this looks like a textbook ABC correction before a potential major move down to come. Now, the NASDAQ is the bread and butter of the bearish thesis going forward, with what looks like a textbook bearish-Gartley pattern setting up here. While I've only briefly covered harmonic patterns in the past, they are extremely powerful and often are very accurate for the price action to come. I would recommend doing some research into these patterns if you are unfamiliar. All that being said, this is a textbook bearish setup. Gold continues to look like absolute garbage week after week on the charts. It did, however, manage to hold a 1660 to 1680 support, which was a key level we mentioned to watch for. Now, while this was a nice bounce, gold is still below key supports at 1800 and 1750, and the downtrend is very much intact. To me, this looks like a relief rally before more downside on gold. Anything over 1800 and gold could potentially make some bullish moves, but we will address that in the future if gold does break 1800. For now, we remain bearish on gold, and investors should be careful trying to take any long positions at these prices. All right, this is why we love Fibonacci. You can clearly see the Fib reaction off of $108, and that 108 to 110 level is also a major resistance going back multiple decades, so we are not surprised in the slightest that DXY is pulling back off of these levels. With this being said, the dollar is still in a monumental uptrend, and higher lows and higher highs are still intact. As long as the dollar remains above $104 on the charts and continues to make higher lows above this level, then we can continue to see an uptrend. And targets of the $120 range is still very much possible. However, if it breaks below $104, then this short-term uptrend is lost. Another note I wanted to point out was the fact that $104 support is also the local high from the COVID crash in 2020. Anything below 104 will most likely be perceived as bearish for the US dollar. I remain bullish in the short term as long as we can break and hold above $108 to $110. Now, let's break down some stocks. Pepsi, ticker symbol PEP, is looking very good in this bull flag. Over $170.05 with continuation through $171.38, and we think that Pepsi can make a macro level breakout up to our target at $176.07. Pepsi begins to pull back, look for a trendline support at $165.95. However, if it breaks below that level, look for a larger scale pullback. The PayPal, ticker symbol PYPL, weekly chart looks extremely bullish. I've got a key hourly level at $83.04 and a bull flag on the same time frame. A break above $83.04, and I believe that we should expect to be trading in the upper 80s fairly quickly. The first hourly level I'm looking at is $87.16. Now, we have support at $80.62. If we break below that, it's not the end of the world, but we will grind a bit lower towards that $78.93 range, and this flag could get a little overextended. I'm mainly interested in a swing above $83.04. So honestly, a very surprising move after Tesla's ER, but we love to see bullish volatility back on this name. In the back of my mind, I believe that we could see a retest of $762 before we go any higher. Honestly, I would love for it to pull back to that level and then speculate long down there with a swing. If we don't see any weakness, however, then we can expect to see a break of $840.87 and have that take us up towards the $887 range this week. And then the next level we're looking for after that is $953.14, so it could be a very hot week for Tesla. If we do pull back and then fail to bounce at the $762 range, we're probably going to be pretty choppy for the next couple weeks. On to Amazon, ticker AMZN. Support looks pretty stagnant at $121.65. It's clear that if we get a 1 hour close below that level, we will certainly head lower towards that double top near $118. On the other hand, over $125 looks like we can retest $127.81. And this does have earnings this week, so that's something to keep in mind. Any charting is going to get messed up after an earnings report. Oracle, ORCL, is looking very good on this weekly chart. Personally, we could see this going either way, but in terms of simple price action, we are leaning long on Oracle. I see a confirmed weekly buy setup, over $76.42, and ORCL has a lot of room to our next target at $80.33, and then again at $81.68. We would have to see a move back below $72 to gain any real downside traction. I'm definitely interested in shorting Apple for their earnings report. This rising wedge is too clear to ignore, and if Apple falls, it will bring the entire market down with it. We continue to stand by the statement that Apple will move SPY. We've got some short triggers near $153.76 and $152.38. If we break those, then we're retesting 150, and below that, we're dying back towards the high $130 range. There is a bullish trigger at $155.60. Over that, and we could see highs of 160 or even 165 near the end of the month. I'm also keeping an eye on this CRM weekly candle. There's a weekly double top at 186.11 that we can certainly get some bullish follow through if we start trading above it. If we do fail to break 186, then 160 is our next stop to the downside. Next up is Microsoft, ticker MSFT. I love the bullish stair steps that we're seeing on this 1 hour chart. Bulls are looking for bullish continuation over $260.86 towards the 264 and then 265 range, with the final target at $268.80. There is a lot of resistance in that area. However, Microsoft does have earnings Wednesday, so bad earnings could see a break below our first support at $259.60. If that happens, then I'm looking at 258 and then 255.88, and then even 246.25 as the next price levels it could hit. Remember, when it comes to trading, it's not about being right or wrong about being bullish or bearish. It's about being prepared for either outcome and able to act accordingly. Check out PB Alert so you can learn how to stop following other people's trades and start learning how to become your own trader. Make sure to check out my video where I went over Visa, McDonald's, Meta, and more earnings plays this week in detail. Don't forget to like and subscribe. I hope to see you all next time, but until then, as always, I hope that you all make some bread.